What assets can you use delta-neutral trading on? Are you curious about what assets you can use for delta-neutral trading? This strategy can be quite effective, especially in options trading and swing trading. Let's break down the key assets that fit into this approach. First up, we have stocks, also known as equities. Stocks are the underlying assets for many options contracts. Traders often buy or sell shares to balance out the delta exposure from their options positions. For example, if you hold put options that have a negative delta, you might buy shares to add positive delta. This helps neutralize your overall position. Next, we have stock options themselves. Calls and puts on stocks are the main tools for delta-neutral strategies. By balancing long and short calls and puts at different strike prices and expiration dates, traders can adjust their portfolio's delta. Long call options have positive delta, while short put options have negative delta. Combining these can help achieve a neutral position. Options on exchange-traded funds, also known as ETFs, and stock indexes are another great option for delta-neutral trading. These options function similarly to stock options, but representing a collection of securities. Traders can use options along with the underlying ETF shares or index futures to balance their delta exposure effectively. Futures contracts and options on futures also come into play, although they are less common for retail traders. In this case, the futures contract serves as the underlying asset, and options on futures can be combined to neutralize delta exposure. In practical terms, delta-neutral trading typically involves holding both long and short options positions that have offsetting deltas. Traders often add or subtract shares of the underlying stock or ETF to fine-tune their net delta. Using various strike prices and expiration dates helps adjust the overall delta of the portfolio. It is essential to continuously monitor and rebalance positions to maintain neutrality as market conditions change. The main goal of delta-neutral trading is to reduce or eliminate directional risk from price movements in the underlying asset. This allows traders to focus on profiting from other factors, such as changes in volatility or time decay. In summary, delta-neutral trading works best with assets that have liquid options markets and easily tradable underlying instruments. Stocks and ETFs are the primary assets, along with their associated options. This strategy can also extend to indexes and futures, where options and underlying contracts are available to hedge delta exposure.